All right, all you devils, how you doing out there? Here we are, April 30th on Thursday, last day of the month. Thought it'd be a good day to take a look at the S&P here, as we've had quite a move off of the low here, and we haven't had a visit here for some time. So I do think that we have 5 coming down. This is hard to argue with. Now, there is an alternate that would have you going A, B, and then you can work 5 into this. 1, 2, 3, 4, 5. Either one. It actually, well, it may not matter, because if it were A, B, C coming down, you'd be thinking, okay, the correction's over, and you'd be anticipating the impulse here. Well, lo and behold, that's exactly what we got. If you're treating this as a 5. Well, the alternate, well, I'd have to go out to a daily here, is that this may end up playing as this giant running flat, as I can, you could do it a couple of different ways. So you could do this as an A, B, C, W, X, Y. You could do that, or just to simplify it, you could think of it this way, if we come down like that. So it could be interpreted either way. I don't know that it matters, because what's dictating now is that we have an impulse off of the low. So just by process of elimination, you're being kind of directed into the more probable income here, outcome here, is that you cannot fight the Fed. They're just too. I will tell you this, right? You can throw fundamentals out the window. Nothing happening here has anything to do with the economic reality we're all facing, with any fundamentals, with any valuation of equities, with any earning. This is purely 100% central bank driven. It's quite the experiment here. Most economists will tell you that this is not going to end well, but in the short term, which is really what we're thinking about here, more short term. Well, I guess that's a relative term. The Fed is going to do whatever is necessary. They are literally telling you they're going to do whatever it takes to prevent the market from falling. And that's hard to, how do you fight that, right? So I think you got to be really careful about the idea that this is down, we've retraced, right, and we're going to get there in a second, that you're likely to be doing that, because it doesn't fit. The count is implying that trade is no longer in play, because you'd be looking for 3 here and we got 5. So whether it's going to, I think the bottom line is we have our low. That's the bottom line, which is, I know it's counterintuitive. You think based just the data we're getting right now, but unemployment and the unemployment claims, it's unfathomable. Is that the right word? Unfathomable. Oh fuck! I'll have to look that one up. Unfathomable. Fuck! I can't do it. It's hard to imagine. How about I say it that way? That in the face of the entire country being closed down, we've had this kind of a rally off of the low, right? That's what there's a reason that they tell you not to fight the Fed, right? You can't do it. They're too strong. They have too much muscle. They manipulate too much. They have an unlimited supply of dollars. Can't fight it, right? So here the market is literally screaming at you to say, sorry, bears, low is in. Sorry. Now, that said, doesn't mean we're not trading technically here, right? So I'm sure every member, and if you've ever watched me on YouTube, God, I'd like to think you've already done this, that I don't need to do this. So you're looking here, and you're looking at that, and you're going, boy, that's a pretty good rally off of the low. Wonder why it stops there. Well, you might look here, and I've got a regression channel on this, and you go, oh, center line of the regression channel. Well, maybe, but what would be the first thing you'd want to check, right? The very first thing you'd want to check. What do we do? So if you were thinking, right, so again, if you've watched my YouTube channel, or if you're a member, obviously, right? If you're wondering, well, that's a pretty good move, where are we likely to run into some resistance? Well, the 50 was certainly a candidate, but the one that you had to be anticipating a reaction was the golden zone, right? I mean, how many times have I shown that? 5,000, 6,000? But I know, right, so you're thinking, well, this time, right, that's just human nature. Well, it's not going to work this time. Not this time. Boy, that's no way it works this time. Not the time that I'm in it. Now, that said, I'm not suggesting that you sell this. I'm not, right? Because you're fighting the Fed if you're doing that. Maybe option traders could pull something off here because of the high vol. But really, this is just, all it's saying is impulse off the low, what is most likely to come next? So even if we do sell off of after hitting this golden zone, well, you got, so just same thing. It just repeats every day, guys, over and over and over again. Doesn't matter, 1 week, 1 minute, it's always the same. Right to the golden zone. So where are we likely to go now? Well, if we're going to start to come down, wouldn't be surprising to see something along those lines, because that golden zone, if we were to come down there, well, that you buy that all day long. If you get, where do I get a 3? I got 5 followed by 5. Right? So the Elliott is useful here. It's reducing the probabilities that this is likely now going to go into yet another 5 here, right? That corrections are, here's a rule you can live by and trade by and die by. Corrections are never 3s. Oh, pardon me. Oh God, what a day. Had a shitty day trading, so I'm bearing resentment at the market here today. Day trading, I should mean, because we just did nothing but chop. Corrections are never 5s. What I wanted to say. I'm 6 minutes in, so I'm not going to start over. Corrections are never 5s. That is 5 all day long. So what are we left with here? Right, that's an impulse off of the low. With the, it looks, well, let's check the length here. Oh, I'm going to get my regression channel off just for the time being. 1, 2. Oh, interesting. Look at that. Just misses the 1. Now, so you look and you go, hey, wait a minute. 3 is not longer than 1. Well, of course, it doesn't have to be. Just can't be the shortest. So 5 will be our shortest leg here. 1 will be our longest. And then, as you just saw me doing, all right, it's just an ideal spot. Now, you could put just a traditional channel on this. You could, right? There's nothing wrong with that. So you got to. So I just line my cursor up there and get as close as I can. So that's nice. But in this kind of where I've got this much range, I like the regression channel. I can just go swing high to swing low. It's going to now it's very very close. I just prefer. I like the idea that if I'm going to break that, I'm breaking 2 standard deviations from the mean. That's a pretty good break. So if this comes down here again, I'm not suggesting selling it here, right? I'm not any longer, right? Because this is a 5. Now, had we stopped here. Here with an ABC, that's a sell all day long, right? Because corrections would have been an ABC. Corrections are never 5s, right? So we would have had a nice 3. So corrections are always 3s. So that was set up, but just doesn't play ball, right? What do we get? We get the big one. So now, right? So let me show you this. So don't misunderstand what I'm saying. That absolutely, I'm not saying that that's not likely to break and that we've got our pivot high in. Actually, I think quite the contrary. I think we're going to do this, right? I think we're going to go. I think that is the high that would be broken. So let me give you an example, right? So we looked at this yesterday in Ethereum, right? So here's swing high to swing low, different story in crypto. We went into the golden zone, tagged the 65, had the little reaction, but now we're through, right? So that's. So remember, just because we get a reaction there doesn't mean we can't get through. Right? So what you'd be anticipating here is that this is going to retrace. Whether we start the deeper retracement here, something like that, right? Then you're likely to break it. But what's less likely, again, it's not that it's not possible. It's just what's less likely is that we're going to come off of this with another 5. Even if you break this thing down and you go look at the subdivision, even off of the last pivot, you've got a 5. So likely, we just finished something here. So again, given the fact that we had 5 down and this is 5 up, the process of elimination, there's only so much. Yeah, of course, okay. So you could say, oh, well, hey, wait a minute, man. Couldn't that just be an A wave? Yeah, it could. Right, so let's recognize this. This could be an A, a B, and we're going to have a bigger. An ABC here, we'd have a deeper, so could go, well, that could be 887. You could have that, right? So I shouldn't say it's not possible that we go down there. Of course, anything's possible. But what's most probable based on what we've got to work with here is that this 5 being followed by this 5, this is most likely just a 1 wave here. Now, you add into that the fact that you've got the Fed basically promising to the market that it's not going to let it fall. That it will do, if it has to go to negative rates, it'll do whatever it takes. They are not going to let the market come back down here. So you start thinking, well, boy, if it did something like that, the volatility would be freaking out again. So maybe selling some put spreads way out of the money would be appealing. Use that to pay for an at the money call. But right now, the odds are, it's always just the odds, right? That's all we get is odds. odds are 5 followed by 5 means the next thing that we're going to experience is a 3. So anticipate the 3. So could you trade it? Well, I wouldn't be entering now, but if I got that, so if I could follow the tag of the golden with another golden, right? That's tradable. Of course, what do you have here, right? Anytime you tag a golden, you've got a potential golden corner. Let's get that right on that. If I tighten her up here a little bit. So you've got this is in play, right? So you haven't lost the odds play that come with a golden corner. You haven't lost that, right? So you're definitely getting mixed signals. So if this pivot holds, right? So this is a bit of a conundrum, right? So what do you do here? If that pivot holds per Andrew's median line trading principles, if that pivot holds, we've got 80% probability we get to the median line. Now, it doesn't have to be right here. It could be over here, right? We'd be changing the pitchfork from original to a shift or a modified shift to accommodate that. So you can just, here's a modified shift, just a channel, right? So something like that which give you a center line down here. So that is possible. But in terms of what that'd be doing to the count, boy, that's going to be hard to reconcile. I don't even see how we could. Well, I guess you'd have to go A, B, and turn. Shit, even that, because this is the impulse of the 3. I don't see how that's happening. So here's the conundrum you got to deal with. So if this starts to come down, well, you're going to get another golden zone here that's going to have those same 80% odds. So here, I know that's getting crowded. Let's get the regression off. Okay, so right, so that 80 is in play. Now let's just assume that we get that. All right, so what do you have there? You're going to get the other side of the algo. All right, so you're going to get the buy side algo setting up here. And again, I don't have this. I don't know that that's where we're going. But you see the conundrum you're going to have here? Who's going to get their 80%, right? It's a question of which pivot breaks first. And again, right, I don't have this, so I'm just speculating here in terms of possible roadmap for the market to come down. So, but if we're going to react hard off of this golden zone, well, that would be the next place you'd anticipate that the market is headed. If it does it in a 3 instead of a 5, if it does it in like that, gotta buy that. Well, trade it, right? However you want to approach getting long. That would be very tradable, even though you'd be making the assumption that this golden corner is not getting to target. And how do you make that deduction? Because you've gone from a 5 to a 5. So here's a clear case where the Elliott is helpful because it's reducing choices for me, or for the trader. Let me say it that way. So I look what's followed here and said, oh, it's not an ABC. Now, if we did something like that, well, there, note here, what's there? So there's the 786. So we could, indeed, we could have an A, a B, and a C, fail to make the highs, and then come down. So I should say that's a real possibility, right? You do have that potential that's there. But, you know, again, just kind of where would be the next trade to be looking for? And I don't want to fight the Fed. I want to be in sync with the Fed, with what they're doing, would be, well, anywhere in here. Right? So we may not get the golden zone. You could come down to the 50. I'd be paying attention. All right, it's unusual, right? So it's, well, we've never seen anything like this, right? You know, the Fed just saying we're going to do whatever it takes to protect the market. I suppose in 08, 09, you had the Fed, you know, different circumstances, right? They weren't, shit, we've already dwarfed what was done in 08, 09. This is a whole new ball game now. They're going big time with this. So I would be very careful about getting on the opposite side of what the Fed is trying to do. I guess that's the bottom line here. All right, so you got to work through the counts and say what's most probable here, because that's all we get. Most probable is that's a 1. 2, and we are off to challenge those highs eventually. All right, guys, there's lots to chew on. I know I can't give you, I would not short that, right? Golden zone or not, golden corner or not, I wouldn't, you don't fight the Fed. Okay, guys, there you go. I think that's everything I had to cover. Okay, back to you. I'll be back tomorrow for Bitcoin Friday. Talk to you.